Good day, everyone. This is the comprehensive computation for TutorSmart's amount of units needed to reach break-even. This presentation will show the expenses incurred in the operations, both fixed and variable, of the service type business during its quarterly period of presentation of financial statements. Consequently, the break-even computation will show how many clients, in our case tuties, we will cater to in order to reach such point. The fixed costs for one quarter ended gives us a grand total of 212,125. The computation for depreciation and the breakdown of other costs will be shown in the succeeding slides. The Zoom Premium has a fixed subscription fee of 750 per month, giving us a total of 2,250 for one quarter. The rent for an office space to suffice our employees has a fixed amount of 15,000 per month, giving us 45,000 for one quarter. The internet and phone fees are a total of a fixed subscription of 2,500 per month, giving us 7,500 per quarter. Our salaries constitute a fixed rate of 200 per hour in the 4 hours per day basis for our tutorial services, which gives us 80 working hours per month and 240 working hours per quarter, which is why for each of our 3 consultants, the fixed salary is 240 hours for the whole quarter, multiplied by the fixed rate of 200 per hour, which is 48,000 per consultant, to which we have 3, giving us a fixed salary cost of 144,000 for the whole quarter. For depreciation, we have a total of 3,375 for the whole quarter. For our 3 consultants, we will be affording them 1 computer, 1 webcam and microphone each, to which we have a cost of 90,000 and 9,000 respectively for. The total cost of 90,000 for 1 unit of computer is depreciated over the useful life of 10 years. We compute the quarterly amount by multiplying it by 3, then dividing by 12, to which we derive 2,250. For the webcam and microphones, one set with an amount of 9,000 is depreciated over its 2 years useful life. Then, like the computer, we compute the quarterly amount by simply multiplying the 3, then dividing by 12, to which we get 1,125. We simply add these 2 components of depreciation, to which we have a total of 3,375. The following fixed costs constitute a fixed amount to be paid per month, which is why we simply multiply this amount by 3 in order to get the quarterly amount that we have to pay. For the online platform, which we chose is Zoom, there is a rate of $15 per month, to which we multiply by 50 pesos is the per dollar rate, in order to get the 750 monthly rate, to which we multiply by 3 and get 2,250 for the total quarterly amount. For the office or space rent, there is a fixed payment of 15,000 per month. We simply multiply this amount by 3 in order to derive 45,000 as the total quarterly amount to be paid for office or space rent. And lastly, for internet and phone, there is a fixed subscription of 2,500 per month, to which we multiply by 3 and get 7,500 in order to compute for the quarterly amount. For salaries and wages, it will constitute the amount of a fixed salary for 3 consultants with a fixed amount of working hours of 4 hours per day, which is why per week, we will have a fixed 20 hours, per month, we will have a fixed 80 hours, and per quarter, to which we will use for the computation, is 240 hours, to which we have a fixed hourly wage of 200. The computation is a uniform amount for all 3 consultants because of the fixed hourly wage and the fixed working hours. So the labor hours per quarter, as I mentioned, is 240, which we multiply by the hourly wage of 200. There is a fixed and uniform amount of 48,000 for all 3 consultants, to which we simply multiply by 3 is a total of 144,000 for all 3 consultants for our salaries and wages. The variable costs constitute of reading modules and materials, as well as the utility cost of electricity for our office space. Reading modules and materials are variable expenses because the cost incurred in providing these is dependent on the number of clients we will be catering. the utilities expense of electricity is also dependent on the increase or decrease of clients to be catered to. The assumption is that we can cater to 50 clients in a single quarter, and the assumption based on average is that electricity will be an amount of 8,000 per month, making it 24,000 per quarter. That is why in computing the reading modules and materials to constitute for the variable expenses, in the assumption also that the business could cater 50 clients for a quarter, we simply multiply 1,000, which is the amount we assume for reading modules and materials per client, times the 50 clients assumed equals to 50,000 for reading modules and materials, and the fixed amount of 8,000 for the electricity, making it 24,000 per quarter. For the computation of break-even point, we still have to get the income statement first. That's why we assume that the business could cater 50 clients in a quarter, giving us a revenue target of 500,000, giving each client a fee to pay of 10,000. So the net sales in that assumption is 500,000 less the variable cost of 74,000, giving us a contribution margin of 426,000. So we deduct the fixed cost of 212,125, which we all computed in the previous slides, giving us a net income of 223,875. So with the aforementioned information and data, we can already compute for the break-even point, which we simply do by using the formula fixed cost over selling price minus variable cost. We have a total fixed cost of 212,125 divided by 10,000, which is the selling price, minus 1,480 variable cost. We get a total of 212,125 divided by 8,250, to which we get the amount of 23.7236, to which we round up to 24, which is the total units to reach break-even point for our business. To check the computation of break-even point of 24 units, or in this case clients, we computed our net income to 0. Since it is 0, 24 units or clients is then the break-even point that determines at what point of amount of clients we will be making profit. We simply computed this by computing the income statement once again, to which we have a net sales of 237,236, which we use the 23.7236 units to determine both net sales and variable cost in, because we already have the per unit basis, to which we have a variable cost of 35,111, which we simply deducted from the net sales, to which we have a contribution margin of 212,125 less the fixed cost of 200,125, which we computed earlier, which gives us a net income of 0, which then proves that this is the break-even point for our business.